welcome to Illuminati Silver. We tell you the truth about silver. Today is Wednesday the 10th of February 2016 and we are dealing with Janet Yellen's prepared statement to the House Committee on Financial Services a few hours ago. In a nutshell, the four key areas covered, which are of interest to us, are her comments concerning the US economic condition, China and its impact, interest rate policy, and why the Fed raised interest rates last December. About the US, Janet Yellen said this, quote, "Financial conditions in the United States have recently become less supportive of growth, with declines in broad measures of equity prices, higher borrowing rates for riskier borrowers, and a further appreciation of the dollar. These developments, if they prove persistent, could weigh on the outlook for economic activity and the labour market, although declines in longer-term interest rates and oil prices provide some offset." Against this backdrop, the committee expects that with gradual adjustments in the stance of monetary policy, economic activity will expand at a moderate pace in coming years, and that labour market indicators will continue to strengthen. Unquote. So in essence, she is stating that economic conditions are holding back the recovery they were hoping to have, but that she is confident that it will eventually occur. About China, she comments, quote, "Growth concerns, along with strong supply conditions and high inventories, contributed to the recent fall in the price of oil and other commodities. In turn, low commodity prices could trigger financial stresses in commodity exporting economies, particularly in vulnerable emerging market economies, and for commodity producing firms in many countries. Should any of these downside risks materialize, foreign activity and demand for US exports could weaken, and financial market conditions could tighten further." Unquote. Okay, here she is saying quite frankly that China has a most significant impact on the rest of the world, and in particular emerging markets. About interest rates, she stated, quote, "The FOMC anticipates that economic conditions will evolve in a manner that will warrant only gradual increases in the federal funds rate. In addition, the committee expects that the federal funds rate is likely to remain for some time below the levels that are expected to prevail in the longer run. In particular, stronger growth or a more rapid increase in inflation than the committee currently anticipates would suggest that the neutral federal funds rate was rising more quickly than expected, making it appropriate to raise the federal funds rate more quickly as well. Conversely, if the economy were to disappoint, a lower path of the federal funds rate would be appropriate." Well, clearly she is quoting the old adage here, it's all data dependent. About the interest rate rise last December, quote, "If the FOMC delayed the start of policy normalization for too long, it might have to tighten policy relatively abruptly in the future to keep the economy from overheating and inflation from significantly overshooting its objective. Such an abrupt tightening could increase the risk of pushing the economy into recession. It is important to note that even after this increase, the stance of monetary policy remains accommodative." Unquote. So here Yellen is basically saying that the FOMC raised rates in order to control events rather than be controlled by them. Of course, we all have our own opinions on that one. The short prepared statement of Fed Chair Yellen to the House Committee on Financial Services did not contain much that was new from earlier speeches, statements, or minutes. It is clear to us that interest rates will remain where they are should the economic slowdown continue, and will be raised should the economy perform better than anticipated. The telling tale to us is the enormous reliance much of the world has on the Chinese economy, and the need to see it continue to grow. Meanwhile, Yellen's accommodative stance suggests a more dovish undertone than a hawkish one. We hope you have found this video interesting and informative, and if so, please give it a thumb up and share it on Twitter. Also, kindly visit our website at www.illuminatisilver.com and look at our Facebook page, which is updated daily at www.facebook.com/Illuminati-Silver. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice, and merely represent the personal views of its owners.